The stock market, it's like a cricket match. Investing in the stock market can be intimidating. It's like facing a fast bowler for the first time. But don't worry, it's not as scary as it seems. Just like in cricket, understanding the game is key to winning. In the stock market, understanding stock charts is your key to success. Stock charts are like a live scoreboard of a company's performance. They tell a story, showing you how the stock price has moved over time. Once you learn how to read them, you can make smarter investment decisions. Remember, investing without understanding stock charts is like batting with your eyes closed. Charts, your window into the stock market. They are essential tools for anyone looking to invest wisely. Imagine you want to buy shares of a company like Reliance. You wouldn't just jump in without doing your homework, right? You wouldn't buy blindly, right? You'd want to know how the company is doing, its past performance, and its future potential. This is where stock charts become invaluable. That's where stock charts come in. They provide a visual representation of a company's stock price over time, making complex data easier to understand. Stock charts visually represent a company's stock price over time. They show you how the stock has performed in the past, which can help predict future movements. They're like a company's report card, showing you its highs and lows. This helps you gauge the company's overall health and stability. By analyzing these charts, you can identify trends, patterns, and potential buying or selling opportunities. This can give you a significant edge in the market. Think of it like scouting a new batsman. You want to see their past scores, their performance on different pitches, and their consistency. You want to see their past scores, their performance on different pitches, and their consistency. Similarly, stock charts provide a wealth of information about a company's performance over time. Stock charts provide similar insights, but for companies. They allow you to compare different companies side by side, helping you make more informed investment decisions. Line charts, simple and sweet. Let's start with the simplest type of stock chart. The line chart. It's like watching a highlight reel of a cricket match. You get a quick overview of the key moments. A line chart connects the closing prices of a stock over a specific period. It gives you a basic understanding of the stock's overall trend. Is it going up, down, or moving sideways? For example, a line chart of Reliance Industries might show a general upward trend over the last 5 years, indicating growth and potential for future returns. Bar charts. A step up in detail. They offer a more comprehensive view of the financial market, capturing the nuances of daily price movements. Bar charts provide more detail than line charts. They're like looking at a detailed scorecard of a match, where every run, every wicket, and every player's performance is meticulously recorded. You see not just the runs, but also how each batsman performed. Similarly, in a bar chart, you can see the performance of individual stocks, giving you a clearer picture of the market dynamics. Each bar on the chart represents a specific time period, like a day or a week. This allows you to track the stock's performance over different intervals, making it easier to identify trends and patterns. The bar's height shows the stock's price range during that period. A taller bar indicates a larger price range, while a shorter bar suggests a more stable price. The top of the bar represents the highest price, the bottom represents the lowest, and the small lines on either side show the opening and closing prices. This detailed information helps investors make informed decisions. Looking at a bar chart of Tata Consultancy Services, you can see the daily price fluctuations, giving you a better understanding of the stock's volatility. By analyzing these fluctuations, investors can gauge the stock's stability and potential for future growth. Additionally, bar charts can be used to compare multiple stocks over a specific period, such as a month. This comparison helps in identifying which stocks are performing better and which ones are lagging behind. Annotations on bar charts can highlight key events that impacted stock prices, such as earnings reports or market news. These annotations provide context, making it easier to understand the reasons behind price movements. Historical bar charts can also be used to study long-term performance, helping investors to identify consistent performers and potential investment opportunities. By analyzing past data, one can make more informed predictions about future trends. Section 5. Candlestick charts. The gold standard. Now, let's talk about the most popular and informative type of stock chart. The candlestick chart. These charts are widely used by traders and investors to analyze the price movements of stocks, commodities, and other financial instruments. These charts are like watching a full replay of a cricket match. Just as a cricket match replay shows every ball bowled and every run scored, a candlestick chart provides a detailed view of price action over a specific period. You get all the details, every ball bowled, every run scored. Each candlestick on the chart represents a single trading period, which could be a day, an hour, or even a minute, depending on the time frame you are analyzing. Candlestick charts, like bar charts, show the open, high, low, and close prices for a given period. However, they provide more information at a glance, making it easier to understand market sentiment. However, they do it more visually. The color and shape of the candlesticks help traders quickly identify trends and potential reversals in the market. Each candlestick has a thick body that represents the price range between the opening and closing prices. The length of the body indicates the strength of the price movement during that period. Thin lines called wicks extend from the body to show the high and low prices. The wicks, or shadows, provide additional information about the price extremes during the trading period. For example, on an Infosys candlestick chart, a green candlestick means the closing price was higher than the opening price, which is bullish, while a red candlestick indicates the opposite, which is bearish. This color coding helps traders quickly assess the overall market direction and make informed trading decisions. By analyzing patterns formed by multiple candlesticks, traders can identify trends, potential reversals, and key support and resistance levels. This makes candlestick charts an essential tool for anyone looking to navigate the complexities of the financial markets. Section 6. Moving averages. Smoothing out the bumps. Imagine watching a cricket match where every run, every wicket causes a huge reaction. It would be overwhelming, right? That's where moving averages come in. They're like a commentator who helps you understand the bigger picture. Moving averages help smooth out price fluctuations on a chart, making it easier to identify trends. They calculate the average price over a specific period, like 50 days or 200 days. For instance, if you plot a 50-day moving average on a chart of HDFC Bank, you can see if the stock is trading above or below its average price, indicating potential buy or sell signals. Section 7. RSI. Is the stock tired? Just like a batsman can get tired after hitting a lot of sixes, a stock can become overbought or oversold. The Relative Strength Index, or RSI, is a momentum indicator that helps you identify these situations. The RSI oscillates between 0 and 100. Generally, an RSI above 70 suggests the stock is overbought and might be due for a correction, while an RSI below 30 indicates an oversold condition and a potential buying opportunity. Let's say Bajaj Auto's RSI is at 80. This suggests the stock might be overbought and due for a pullback. Section 8. Fundamental Analysis. Looking under the hood. Stock charts are great for understanding price movements, but they don't tell the whole story. Fundamental analysis is like checking the engine of a car before you buy it. It involves looking at a company's financial health, management team, and industry position. You can use charts alongside fundamental analysis to see if a company's financial performance justifies its stock price. For example, is the company's revenue growing? Are its profits increasing? Combining technical analysis or charts with fundamental analysis gives you a more comprehensive view of a company's investment potential. Section 9. Real-time insights. The market right now. The stock market is dynamic, constantly changing like a T20 match. Real-time market insights help you stay updated on market trends and news that could impact your investments. Many financial websites and platforms offer real-time stock quotes, charts, and news feeds. You can use these resources to track your watch list, identify potential trading opportunities, and make informed investment decisions. Remember, staying informed is key to success in the stock market. Section 10. Keep learning and grow your wealth. Congratulations, you've taken your first steps towards mastering stock charts. Remember, knowledge is power, especially in the stock market. Keep learning, keep practicing, and don't be afraid to make mistakes. The stock market is a journey, not a sprint. By continuously educating yourself and staying disciplined, you can achieve your financial goals. As a special bonus, we're giving away a free ebook, Decoding Stock Charts for Beginners, to the first 100 people who comment, "Charts are my superpower," below. So, what are you waiting for? Start your journey towards financial freedom today.